This episode is brought to you by the Halton Real Estate Investors Group. On April 28th at Sheridan College in Oakville, Ontario, the Halton Real Estate Investors Group will be hosting joint venture expert Joey Ragona, where he will be sharing his secret JV formula where partners fit around his schedule and his investment strategy. We also will be hosting Neighborly because myself and many other investors enjoyed the paid version of Neighborly, but now it's free. Jerome Minyuk of Neighborly will be coming in to explain how the automated data gathering and the tenant risk analysis works in plain English. We were happy to pay for it before, but now it's free. So we're happy to host Jerome and Neighborly. Plus our regular From the Streets update on rents and prices in target investment areas. We will have April's Best Buy property, and the meeting is followed by our Street Smart tour of one of the top areas for investment in Ontario. To register, go to www.truthaboutrealestateinvesting.ca/meeting. Again, that's www.truthaboutrealestateinvesting.ca/meeting. And I hope to see you there. Beating rental licensing, investing in apartment buildings, and cryptos with Mike Uliano. My friend Mike Uliano is many things: a backyard gardener, a foodie expert in the restaurants in the Niagara region, and that also goes for apartment buildings. Mike is also led a coalition of Niagara landlords to fight the city of St. Catharines in Ontario Superior Court, and won, thus allowing us student rental investors to operate our safe, clean rental properties for young adults. Mike's advice and lessons are now more important than ever, as a couple of Niagara Region towns, including Welland and Thorold, are in the middle of implementing licensing, as well as St. Catharines, which is currently considering rental licensing. I'll include a link in the show notes for the city's survey on what your thoughts are on rental licensing. Mike is also a savvy stock investor who consistently outperforms the market. And when folks know how to make money, that always piques my interest. He also trades cryptocurrencies, again, piquing my interest, including Bitcoin. So if that interests you, you will want to listen to hear how he does it. So without further ado, I give you Mike Uliano. Sorry, man.
Hey, we lost you.
I was trying to shut down a different application because it was popping up on me, and I shut down my Skype by accident. Sorry, so let's start over.
That's okay. Yeah, no problem.
So what interesting things are you up to these days?
Right from the start. I've been keeping busy a lot now. As the snow's melting, you kind of start to see the real estate investors come out and start looking to buy things, start doing renovations. A lot of contractors even take their vacation in the winter if they have a chance to. Mm-hmm. And so you have a little bit of a slowdown. But I've been starting to rent out a lot more apartments lately and show a lot of student rooms. Mm-hmm. And as school it's going to be ending once April is done. There should be a new wave of students coming in, or students going into a summer period where they might be working, mm-hmm. or they might be taking some classes. So there's a lot of turnover that happens for May 1st for university students and college students for rental properties.
Okay, so that was a mouthful. Could we maybe start with some tips on areas you would suggest investors to be looking at, and then some strategies? Like for example, a lot of my own properties, we're having to renovate it a lot nicer. It seems like tenants really care about appearances. Like they want the stone countertops and they want the stainless steel appliances. Like it's almost like every renovation we're doing right now, whenever we have to do a countertop or an appliance, we're going all stainless. What are you seeing?
Well, I would say, I assume that when you're saying that, are you saying across the board, or is that more of a Toronto area thing for you?
Oh, no, because our properties are in Hamilton, and even my St. Catharines property, we're going to a stone countertop. It's just, I think that countertops had been replaced twice. Just a young person put a hot pot on it, like a laminate countertop, and then you can't repair that damage. So just going.
From my perspective in Niagara here, I would say that's becoming normal here, but it's not standard. Mm-hmm. Most landlords, especially if they're local landlords, they wouldn't go through all that effort, and it's just, I think it's probably more common maybe in Hamilton or higher priced areas, I would imagine, but mm-hmm. It's spreading here. Mm-hmm. And what's happening is our market's a bit competitive now. There are a lot of people in the Niagara market for Brock University or Niagara College. So if you want to stand out from everyone else, you can do exactly what you just said and now only a small percentage of the market was willing to do what you just said, because you're taking out a line of credit or using some cash to totally make your property look more modern, have more features to it. So if you do that, I think you're going to get your property leased more easily year to year, and you'll be able to get the full rent price with less haggling with the people showing up.
Right. So what kind of property are tenants preferring? Do they like the high-rise apartment buildings, or are they preferring like the duplexes, which just seems to be a common strategy for a lot of investors these days? Or they want their own house, just single family?
I find that basically, I think if you put yourself into the shoes of a young couple, or maybe someone just getting married, or even just a young professional on their own, if you're 25 years old, let's say, and you have a job, maybe even a good job, you might not be able to afford the housing depending on your situation. So maybe you can't purchase, even if you'd like to. Sometimes if you're a teacher, that's a great job, but maybe you only have a 1-year contract. So there's a lot of young professionals, whether they're single or not, that are looking to rent, in my opinion. And I think that it's a kind of a landlord's market, in the sense that there's a lot of good young professionals out there that may not be ready to jump 2 feet in to a mortgage yet. So that's an advantage as a landlord. And if you have a nice quality property, I think you'll find people that'll appreciate that would otherwise be owning and would like something nice.
Right. So the real estate that you deal with is Niagara Region. Are you seeing many commuters? People from out of town? Like more towards GTA? Are they coming from there?
In terms of driving to go work in the GTA?
Yeah.
Not so much. I mean, you hear about them, but if you really think about it, I mean, maybe if you live in Toronto, it's a little more, or in the GTA, it's more normal to drive 45 minutes or an hour each way. If you live in Niagara, you pretty much don't do that. I mean, I have a friend that drives to Hamilton every day, but most people I know in Niagara work here. So to really go and drive from here to there, I don't see too much of that yet. No, right. To answer your question. So I think that basically the GO train is proposed to come to Niagara for 2021. And if that were to happen, then potentially you'd see people that maybe currently live in Hamilton or Burlington saying, well, I can get the same house for considerably cheaper in Niagara, and maybe they'll also gain value as the GO train approaches, and maybe they'll use the GO train or commute to Hamilton or Burlington at that point, maybe. But we haven't seen any big noticeable influx of people just uprooting here.
Interesting. There was an article in January that actually said like 1/3 of transactions for property purchases in Hamilton, 1/3 of them were done by agents from outside of Hamilton, as in like they didn't belong to our board. So I thought that was interesting. And also, property managers have confirmed that. In terms of in the rental market as well, they're seeing probably more than 1/3 of tenant applications are coming from the GTA area. I think eventually it'll be more spillover to the Niagara region, considering how much more affordable it is. I think St. Catharines' average price for a home is like at least like $120,000 less, right, than the same home in Hamilton. So you have a lot of affordability advantages.
Even me here, I do property management in Niagara, and I mean, I can confirm what you just said, in the sense that a lot of people purchasing real estate are from out of town, more so than tenants. It's the purchasers of the real estate that are from out of town. Right. And if you were in Niagara 10 years ago, you met people from out of town investing here, but there was no equity gains, really. It was very minimal. Right. And they might have been investing here for cash flow. So now you can get a little mixture of both, but it's the equity that people are chasing, I find. Right. And that'll pull a more savvy investor from the GTA or Hamilton that maybe has been going from Barrie to Hamilton to Toronto and following value investments. And a lot of those folks have been investing in Niagara. And the market has really heated up here. In the past 2 to 3 years, we've gained a lot of value each year. And prior to the GO train and a few other things we have going on here, we really didn't have an equity-driven market. So things are kind of picking up in the general Niagara region here.
Yeah, the markets... I was actually trying to pull up my presentation. It doesn't seem to be handy. Oh, no, there it is. I forgot what I wanted to ask you. So, if you're an investor, you're a new investor to St. Catharines, Niagara Region. What would you be recommending they do right now?
For me, I mean, if you ask 10 different people this question, they're going to give you several different answers depending on which investor you're talking to. I would say personally, I like newer product, and I have a bit of a biased reason for that. Just living in this community, I kind of know how it works. If you're a young couple or a young professional and you have the financing to buy a brand new built house, you pretty much can't get one unless you know a builder at this point, a small builder. Mm-hmm. The advertised large builders that have their billboards up in large parcels of land, they're sold out for years to come, and they've been sold out already for several years going backwards. So it's very, very difficult to land those newer properties. And for that reason, I feel that their pricing is getting bid up more than a standard property.
Yeah, it's funny. I remember I had a listing for a bunch of townhouses in downtown St. Catharines that didn't sell. That was like 4 years ago.
I remember those ones. Yeah.
Is that place all happening now?
Yeah, those have been bought and sold depending on the one that's come up. And I can only imagine they've gained 50-60% value since then, at least, if not more. I mean, they're really nice properties.
So the February stats are out for Niagara Region, so specifically Niagara Falls. That market, so the average price, this right? Hang on. I'll make sure I get this right. Yeah. Okay, so the average price for a home in Niagara Falls in 2018 was $348,000. And now the average in February is $408,000. So the delta is $60,000, which is like 20%, close to, not quite 20% in 1 month, but yeah.
When I was following the pricing, I mean, in 2015, the general St. Catharines market was up, I think, 15%. And then in 2016, it was 16%. And last year, it was, I think, 26%. So those are pretty good, and that's just the average. There's properties that are prime location, newer properties that went up much more than that. Mm-hmm. And then there's below average, maybe poorly maintained homes that didn't go up as much as the average. So that's very meaningful for Niagara, because we used to be, 3, 4, 5% equity gains. Really, you wouldn't expect much more than that prior to the past 3 years.
Right. Now, what would you recommend for someone who wants to go to St. Catharines for Brock student rentals, or that area? Is that a market you think people should be getting into or getting out of?
If you want to do Brock rental specifically, I mean, that's our university, and it's the largest population of students compared to Niagara College. There's, I believe, well over 20,000 students at Brock now. And it is the biggest market, but for that reason, there's quite a bit of competition, because most people can see that if you just observe the population of students. Also, Brock University, unlike, I believe, in Hamilton, if you go by McMaster, there's housing pretty much right across the street from the school. Mm-hmm. And most cities are set up that way with their universities. St. Catharines doesn't have that. We're surrounded by an escarpment of kind of forest and trees, highways, McDonald's. There's really no housing near the school. So if you just own anywhere kind of surrounding that university, you're at an equal playing ground with any other investor. And so it's quite competitive. Mm-hmm. I'd say if you're going to invest in Brock rentals, you're doing it for the equity. You're going to be doing, if you're getting in at today's prices, as opposed to 2 or 3 years ago, especially. Right. At this point, you're kind of hoping on equity, and you're going to have to do a lot more plug and play with your students because they have a lot of options. Right. If you go the route you said, that's the way to do it. So if you want to distinguish yourself from the rest of the competition, put in the granite countertops, the nicer appliances, change your flooring and baseboards and old doors and wallpaper and all that stuff, if it exists in the property. Right. If you do all that updating, then you should be okay to stay rented. But you're going to need someone as a manager, or you yourself being flexible to do that plug and play and kind of maintain it. Mm-hmm.
And maintain those relationships and check on our property, because students aren't always the nicest to their rental property and the appliances in the rental property.
And you never know that going in. Unfortunately, you don't discover that until they've moved in, because sometimes they come through even with their parents, and you just don't know if they're going to be clean necessarily when they get in there. So in some rental properties, you can even hire a cleaning lady to come in once or twice per month if you build that into your rent price, and at least your common areas get cleaned.
Right, and they can be your eyes on the property.
Exactly. They get a chance to peek in on things. So with student rentals, I think basically if you want to have something that kind of works in the background for you and has less variables and less perceived risk up front, I would say maybe you might be better off getting a little duplex that you don't have to deal with students going in and out every year. Yeah. And maybe you can try and aim for a more stable long-term tenant. But if you buy in a strategic student location and the city keeps going up in value, those prime locations will gain a lot of equity, even though it might be an older home.
Yeah, I'm really happy with my Jacobson properties near the Penn Center. For anyone who knows the layout of St. Catharines.
Just as an example, even your property on Jacobson, it's just a small bungalow, right? But the location, which is the value, because there's little bungalows like that all over the city, and little bungalows in the area you're referring to on Jacobson Avenue are simply more valuable just because of where they are.
Yeah. So one more question for around student rentals. What's key to picking a location for your student rental?
Well, I can only speak for Niagara, so every region might have its own little differences. But in general, if you're going and approaching a market, let's say like McMaster, or even locally where I am, you have Niagara College in Welland and Niagara College on Niagara on the Lake. There's another campus. So those campuses have housing right across the street from the school. I personally would target that property that's located across from the school. And there's two schools of thought there. Some people might say, well, that's the most expensive property, Mike, so why would you approach that? I would say it is, but it's also going to gain the most value if you're a long-term investor and want equity. So if you buy far away from the school, you might not be able to get full as easily. You might not be able to charge as much rent to the students. If you have that prime location property, it's going to be an easy sell for you, in my opinion, assuming that it's either a newer built house that you've maintained or an older property that you've made to look almost like new. So if you combine location with the proper condition, you're going to be in the top probably 10 or 20% of landlords that are willing to do that, as opposed to having an older property with some lipstick and some makeup on it, so to speak. You actually have a nice property.
Right. So I said last question around student rentals, but I lied. Because I wanted to ask you about like when you went to bat against the city. You cool to talk about that? Like, so, because I think a lot of, I know a lot of investors are running into this now, and they're always concerned. I think, like Hamilton, for example, I think they put it to vote. I think they voted it down. People always, it's funny, because like you live around a school, you should kind of expect students to be there. To live like students. So, do you know how it started? What kicked things off? Like, what was the catalyst in St. Catharines for their push for rental licensing?
Well, I mean, I went to Brock University in St. Catharines, so I started as a student, and once I was done being a student, I bought my first house, and it rolled into property management, and I've gained a lot of experience over the past 10 or 15 years of being a student and a landlord. So, as a student, sometimes you have certain students or certain homes where they have parties and get rambunctious. There's certain, people that don't put their garbage out, cause noise issues. There's things that can happen at certain homes, especially if it's a student home. It can happen in non-student homes, as you know. There's regular rentals where people can cause those problems, but it seems to be prevalent in university students who are out maybe, enjoying some alcohol or living together with a bunch of young people. So in general, even when I was starting in property management back in 2005, I was being told stories from clients about how they get, approached by the city or the fire department if there's a party at their house. They get a specific visit at that time. So because of those incidents happening over the years and over the decades with university students, these neighborhoods that are located close to the school have a lot of long-term residents in there that don't appreciate that, basically. and sometimes there's even newer built neighborhoods, which you're familiar with near Brock University, and you have people that are raising their young children there, and they have almost a zero tolerance for that stuff, and they have rightfully, like they have a big mortgage on an expensive home. They had it maybe custom built for their taste, and now they're dealing with these issues. So that's really the driving force behind it, is that you have a number of residents who pay their taxes and voice their opinions, and justly so. I mean, you can't blame them. And then the city kind of has to respond in some manner to make the voices be heard. That's really what it comes down to.
So what year was that when the city responded and they were like knocking on doors?
Well, what you're referring to is when they gave hundreds of people notices, essentially. Yeah. So as opposed to this party had a house and there's toilet paper in the tree, we'll approach that house. It was more just, no, we're letting everyone know, here's a letter describing that we think you're a rental property and we think you're a boarding, rooming, and lodging house. It was kind of a generic. It wasn't specific to your address or the design of your home. It was just saying, basically, call us, confirm with us that you're a rental property, let us look through your property, and then we'll kind of determine, how you're operating it, basically, and whether there should be additional rules placed on you. It was kind of basically volunteer to have us come inspect your house. And they, how do you say this? They conveniently only gave it out in locations where there was a high density of student rentals.
Right. And then what would happen if you invited them in?
I mean, geez, I was talking to people at the time. I mean, I had people calling me, and I was calling people just because, I wanted to see, did you call, or do you know anyone that called? Because we weren't sure what to do yet. I kind of said to my clients, to kind of wait and see what happened, because it wasn't like they received some kind of a mandate or a registered mail. It was a very generic letter. It wasn't specific to their property or any incidents. So I just said, let me kind of see what everyone else is doing. And when you make the phone calls, you have different people out there. You have people that can't go to sleep at night till they figure out the answer to the question, and they called right away because they were worried about it. So I know people that called, they had the inspection done, and once the inspection is done and you've allowed them and permitted them to come to your property, they're required by law to give you a notice about any deficiencies, so to speak. So if they decide
deficiencies based on zoning or building code or fire code, or
they were giving their interpretation of all of these codes in terms of building code and fire code, and they were basically saying if you had more than 4 occupants, and then they listed off some other parameters, that you could be considered a boarding, rooming, and lodging house at that point.
I have a wife and 2 kids and a nanny. Am I running a boarding home?
And then you could see how the parameters they set were very loose. It wasn't specific to your property. They didn't see anyone's leases. They just knew that there were a certain number of properties out there that had these parameters potentially in place.
Right. So, and then what would it make you do? What if they found, say they came into my home and like there's 5 people living here? What would happen then?
If they if they came into your home with your wife and kids, it was this weird situation where they can't say, we're going to go pick on students. You can't just pick on elderly. You can't just pick on students. You can't just pick on Canadians. You can't just pick on a certain sector of society, right? So they said it was all rentals, but when it came down to it, they were defining boarding houses as being the setup for student housing, right? So in your example, you're not paying with all individual checks. You're literally a family that's blood related. There's all these.
Oh, but they don't ask to see the lease. How do they know? How do we know or not?
They didn't know. They just gave everyone a notice, and they were basically fishing to see who was in which situation, basically.
Right. Which is not very nice, because the people who voluntarily come forward usually aren't the problem.
The people who are the problem would never ever volunteer.
Yeah, they'd be the last to volunteer.
Yeah, that's the way it works. But at the same time, again, they have a number of complaints from tax-paying citizens, and they do have to address it. Yeah. So with the people who called and volunteered got inspected, and once the fire department in the city were to see what in their mind was a deficiency for, a boarding house, because once you're defined as a boarding, rooming, or lodging house, you're almost treated like a hotel or something. I mean, like a boarding house. You have to have all emergency lighting through all your hallways, all these HVAC system upgrades, all kinds of over the top renovations, which is not typical.
Significant capital costs. Yeah.
Exactly. So most student rentals don't have to go through a lot of these things. It's more meant for a rooming house or like a temporary stay type location,
right,
where you would need that. But basically, people who volunteered were deemed as a boarding house and given a notice taped to their door, which they could not remove. And it stated all of these changes they had to make to the house, which if you have an older bungalow, which is, 95% of the properties near Brock University, basically, you don't have a separate walkout to your backyard. You don't have all of these things that a rooming house or a boarding house would need. So in order to keep your tenants in place, let's say you have 6 students in, if you want to keep all 6 in there, you have to do this $10,000, $20,000, $30,000 worth of work to allow you to keep those 6 or 7 people in there.
Plus change your zoning. Get your change of use as well. Which is
right. But for a residential home, you're kind of limited. So basically they were saying you have to do all of this work, or you have to limit yourself to 4 or less tenants in that property. So the people who were really honest at the beginning, I know some people that did the $20,000, $30,000 worth of work. I know some people that sold their rentals. I know some people that went to 4 tenants instead of 6.
And then what did you do? Because you were the rebel rouser.
Well, I mean, no one was trying to cause any trouble or anything, but a lot of us felt like we were pretty good landlords, and we were kind of being singled out due to some students who caused problems and caused neighbors to not be happy. Basically, we don't want neighbors to not be happy. I mean, I was a student at one point as well. I understand how it goes sometimes, and there's some students that are more rambunctious than others. But it's not really. You shouldn't paint all students with a brush of being party animals, and they shouldn't live in your neighborhood, especially if you live near a school. That school is part of your economy. I mean, Brock University helps drive this Niagara region, and if it were to go away, it would be bad for the residents of Niagara.
Yeah, and I've never had a serious complaint at any of my properties.
Yeah.
Actually, one time, a neighbor, a really nosy neighbor who actually discriminated against young people. He called the cops, and the cops showed up, and and then the tenants there's 6 of them on the driveway, and the cops were like, "This is what we got called here for? Can you guys just step inside the property?" Like, seriously, I know. Like, police's job is to serve and protect. Here they're being called away from whatever they're doing to ask 6 people to step off the driveway, go back inside the property. Yeah, that's a really good use of their time.
I know, and there are a lot of legitimate complaints being made. We don't want to pretend that there's no problems, but there are a lot of people that would like it to be pin drop quiet at night and all of that, and it's just not reasonable, especially if you're living in a student area. They're probably going to stay up a little later at night and maybe be having conversations in their backyard. They shouldn't be blasting their music late at night. But even when I was a student, we were having a beverage on the back deck, and we weren't causing any problems. But just the fact that we were outside having a conversation and playing poker and having a little card game, we had the cops show up in our backyard, and they kind of laughed it off and said that neighbor has called them many times to this property, and that it's always been a student rental, and he complained a lot. So there's some people that'll call for any little reason, and some people that legitimately will only call because there was a really bad incident or a big party. So there's a mixture of both.
There's a mixture of both, and there's the other extreme side is when we're talked about that new housing area called in Thorold, like Winterberry, and this happens at every major school. Like we had at McMaster, I think the homecoming party was 5,000 people, which I don't. The other side of policing, and I love police. First of all, they have the toughest job, but I don't understand why when they're advertising all over social media where the party is going to be, how come they're not there already? Park a couple cars, a little bit of prevention.
It seems as though almost as though they should be able to have a way of figuring that out. At the same time, there's a lot going on during that specific week at the beginning of a school year. So that their time is quite stretched out, and there's a lot of maybe get-togethers or parties going on. But the neighborhood you're referring to seems to have an annual bash, a huge party out in the streets every year. So they should be almost patrolling. they should be patrolling that neighborhood every hour or two on that evening.
Yeah, exactly.
I would imagine, yeah.
But we'll get off the topic of cops because I want to talk about more about what you guys were doing to fight the rental licensing. So what was the next step?
So at that point, I'd done a bunch of fishing around, and you get different opinions of people that have called or not called and all of these different things. So I just said to myself, well, we're all in the dark and we're being put in a position where eventually we'll probably get inspected and be in some awkward position. Why don't we just try to approach, a number of other landlords and see if maybe we want to get together and talk to the city? Because, we weren't trying to be adversarial, and we knew kind of why they were doing it in our minds. So we approached, I got together a grouping of probably, initially it was 5 or 10 property managers and landlords. Then it became 20 or 30 people. Then we formed an association, and it became 120 or 150 people. We actually formed an association where people chipped in and allowed us to kind of...
What was the association called?
It was called the Niagara Student Housing Association. And like I said, it was just a way for us to get together to kind of chat about what was going on. And in the background of setting all that up, I set up a meeting with the mayor of St. Catharines, the local fire department. We were chatting with different people. And what we found was basically, we were approaching saying, we understand that there's problems and those specific problems should be addressed, but is there a way where maybe we can all work together and discuss it? We meaning me and other property managers and other landlords represented, maybe hundreds of student properties. Why not just talk about it openly and honestly and try to figure something out about how we can solve the problems? They basically didn't really want any part of that and just said that we had to comply to the letters that were given, and they considered houses of the nature we were describing to be a boarding, rooming, and lodging house. There was no leeway, basically, and it was very, very clear that that was just the way it was going to be. And no matter how many meetings we set up, we were on opposite sides of the spectrum, and it wasn't going to be something we could figure out that way. So at that point, we had all of our landlord meetings basically saying, should we try to take action and talk to a lawyer, or should we lose 30-40% of our annual income and limit to 4 students? It's when you have 6 or 7 students in a home and you're going down to 4 tenants, it makes it not even a viable investment. If you just purchased the property recently, you got to cover your mortgage. So it's and then where are all the students going to live? If you can't have more than 4 in a house, that's great, but that just means you need more rental houses with 4 people and then instead of 6. And I tried explaining that. I said, you're fighting the problem of student housing, but you're creating more student housing if you have less people per house. It's kind of common sense.
They'll spread to more neighborhoods.
There'll be more neighbors that have a student rental beside them if you limit it to less people.
Yeah, because folks still need a place to live.
The attendance of Brock University, the population of Brock University only is going up. So if you make the stricter rules on rental housing and limit how many people per home, you're simply creating more rental homes for students. And it just really didn't make sense to approach it that way. The problems you were trying to solve would almost be made worse, potentially. So we ended up approaching a lawyer who had dealt with it in London and dealt with student licensing and bylaws and things of this nature. And in his opinion, you couldn't really limit the number of occupants if you were doing your due diligence and maybe doing your leases in an appropriate way. And that, we should fight them on it, basically. He said if they want to do licensing, they can do licensing. Right. That's something they can do, but they shouldn't limit the number of occupants or call you a boarding house if you've set up your leases and your homes in a certain way.
Right. So you guys went to court with the city.
We ended up going to court. We kind of had, again, we either had to get inspected and sell or, evict tenants, basically, change our way of business, or we had to go through a lawyer and try to take them to court to see what the right answer was. So we chose to go that route. Again, we had people chipping in $100 or $200 each, and we were having open discussions about it with over 100 landlords locally. And we took it to court. When you go to court, you never know what's going to happen. You could just go and spend $5 or $10 or $20,000 and not get a victory, or maybe sometimes you get lucky and you get a victory. So in this case here, we ended up getting a victory in court. Now, again, this was based on a specific example rental property in a specific scenario. It wasn't, we weren't looking at hundreds of different rental properties and hundreds of different leases in this court case. So if you're listening to this right now, don't assume that you can just go and do whatever you want with any different property. This was one specific property that won this court case.
Right.
So, but what ended up happening was by winning the court case, you set a precedent that's basically saying, what was written in that letter is not true, and the public won't necessarily accept it to be true anymore once you have that precedent. There's going to be a lot of questions now. If you approach someone with a letter saying you can only have 4 tenants, there's now a precedent and a court case that says otherwise. And so we ended up winning. We didn't end up getting all of our money back too. I mean, we had people donate towards the cause, but even when you win a court case, you only get a little bit of the money back. So, we were out probably $10,000 or $15,000 as a group, and if we hadn't come together, I mean, who can afford to spend? You might have kids or a mortgage. I mean, you can't just spend $20,000 in a court case. So we could only do it as a group.
And that's why I suggest everyone buy you lunch whenever they come visit Niagara Region.
Yeah. I mean, at the time here, I mean, I don't know if you could see this here, like it actually ended up getting.
You still have it? Did you have that ready?
I still have it available there. So we ended up getting in the newspaper, and I mean, there was you should have seen it. I mean, every week there was one article slanted about how horrible students and landlords were. Yeah. Then the next week there was an article saying, well, not all students are bad, not all landlords are bad, and it was this battle back and forth in the headlines, and everyone was trying to make everyone else seem like they were improper or not doing things appropriately, basically, and I really wish it could have been something that could have been worked out mutually, but it seemed like we had to go to court in that specific case.
Oh, so for those listening and not watching the video, so Mike showed me Mike still has the newspaper clipping. Do you know what people can Google to find that newspaper article?
If you Google this headline, "Landlords Win Legal Victory Over City," you should be able to find it. If you could probably see that on your camera. But the title is "Landlords Win Legal Victory Over City," and there should still be the write-up about it there if you want to read about it. And that was in around 2010, 2011 was the time range that this all happened. So, I mean, it was a big learning experience. And, even just leading back to one of your original questions there, if people ask me, hey, I'm new to Niagara, what should I invest in? If they don't state a preference of student rentals versus apartments, for example, I kind of tend to steer people away from student rentals just because if you're not already an established investor in student rentals, you might not be used to some of the variables and plug and play that's needed for that. And also, I just like the idea of having multi-unit properties with more long-term tenants in them. And being able to let them kind of run in the background with a bit less maintenance to them, a bit less late night phone calls and random variables that you can have with student housing sometimes.
Definitely be more picky. For example, like one of my Jacobson properties, one of my Penn Center properties, we just have it for rent, available to anyone who wants it. So we're screening the applicants that come in, and just so happens that we have 4 students. They're a bit older. I think they're like at least second or third year, at least. But their application was stronger than others that came in. So that works. That'll work for us. And that's enough student talk, because there's so many other interesting things that you have to talk about.
Sure.
Let's talk about stocks. You know anything about stocks?
Yeah, I'm quite interested in the stock market, actually. I mean, almost even more so than real estate, or equally with real estate.
Yeah.
I do a little bit of both, and it's a lot more variables at play when you're talking about the stock market. That's for sure.
Right, but you've been like, you're interesting in that you've been consistently getting very good returns. Are you able to share like what your returns have been? Like we just had a correction too. Like how are you doing after the correction as well?
I mean, yeah, right now it's March 27th here. And I mean, if someone's listening to this here, I mean, the market has not been doing that great this week. And I think one of them was I think it was like one of the largest single day point drops in the history of the Dow Jones happened this past week, actually. One of the three worst days in terms of how many points it dropped. So there's a lot of drama going on. I've done well, but it's kind of like a real estate investor saying they've done well in the past 5 years or so. It's good to pick strategic location, but it's easy to do well if the general market is kind of roaring behind you too. So stocks and real estate are both in a heavy bull market right now, and so the returns have been very good, especially if you're being strategic about it, which is kind of what you're pointing at. A lot of people traditionally think it's hard to make 5 or 10% per year in the stock market, and you give your money to a money manager kind of hoping maybe they do make you 5 or 10%. For me, I would be pretty disappointed with a 10% return. It's just one of those things, just because for me, I've studied it for a while and I have a little bit of a system down that I can make much more than an average return when you have a really big bull market going on. Right now, this recent stock market drop, I haven't really lost any money, so to speak, because I don't really hold my positions all blindly. So I actually don't own any Apple shares or Netflix or anything like that right now. Right. So depending on how you're working your strategy, if you're holding blindly long term, you're going to ride it like a roller coaster on every up and every down, and you're just in it until the end. I kind of plug and play and try to buy after a big drop and get out before the next big drop happens is the ideal way I try to time things.
How do you do that?
I like to explain to people, if you want to be a baseball player and you want to hit every pitch, you're never going to make it. So you're never going to hit every pitch, and you need to accept that from the beginning. If you want to be one of the best baseball players in the world, you can bat 400, which means you only might get a hit 40% of the time. If you're playing stocks and you're aiming to hit every pitch, you're going to be really disappointed. So that's the first thing to get out of the way. Then if you add to that it being a bull market, which from 2009 until today we've been in a bull market because the stock market crashed in 2008 and we've been running upwards ever since then. So if you're in a bull market like that and you're using some chart analysis and buying opportunistically after large drops in price have happened for a quality company, you can really turn over a great return by buying in at strategic points in time. It'd be like if you had a big drop in real estate, such as the USA happened in 2008 there. A lot of people started buying U.S. real estate due to the price being so cheap and them believing in the fundamentals of that country. You can apply the same logic to a stock or a company.
What are some favorite stocks right now?
Right now, right now everything appears visually to be on sale. You have Facebook that was Well, Facebook was $180, $190 not too long ago, and they went down to around $150 recently. There's a lot of quality stocks that have had price drops in them. What stocks do I like right now? I have a wide range of stocks I'm watching. I like Facebook as a long-term hold. I think short-term, if you're buying in, Facebook's going to have a lot of ups and downs. They're going to be having some court testimony and some privacy issues they're dealing with. But I think right now you want to just be buying some quality stocks that have dipped. If you can look even at an Amazon or an Apple or there's so many Home Depot, all these quality stocks. As long as the U.S. market doesn't crash and we have a rebound, as we always have in these situations since 2009, all of those companies will go up in value once the fear leaves people's TV screens and internet browsers. Right now, you're just seeing fear and will the market crash. That happens on every dip. And only when we start going back up to the upside does the media start talking in a positive manner again. So if you have the, if you have the fortitude to buy when everyone thinks the market's going to crash, you tend to be rewarded with a further rally, is the way it works during a bull market. At some given point, the market will crash or correct, right? But if you really look at it, a lot of investors almost think it's going to crash every year, and they're always kind of investing with that in mind, that it can crash. But you tend to rally for 5 or 10 years between every crash. So you really shouldn't expect a crash to happen every year.
Right.
And if you're not scared of crashes all of the time, and you buy when there's a big correction in a stock that has great value in it, that's what Warren Buffett does. So I try to do that as much as I can. And there's certain chart analysis and technical indicators, without getting too complicated with it, that you can use to refine when you get in and when you get out to try and maximize your return.
Okay, so I want to get into that, but before that, so how long are you in your positions for? And let me take a step back. A lot of investment theory, right or wrong, a lot of it teaches like buy and hold and just hang on. Even Buffett's talked about that before. Just like as long as it's a good company, just like get in and then forget about it.
Yeah.
That's not what you do.
It's not necessarily what I do, but I also, every person will be different. So, I mean, I don't have children, and I don't have a commuting back and forth to Toronto. I don't have a lot of variables that other people might have in their life. So I have
Expenses.
time. I have time to invest towards maybe studying the stock market a little more than some other people may. So, if I had a busier lifestyle, for example, and I had a couple kids and was commuting and busy, I would probably take a different approach too. So I think you have to pick what works for you. You also shouldn't be trying to time stocks if you don't know how. I mean, it's one of those things. It's nice to want to build a fence, but you need to know how to build a fence first.
Right.
So I started looking at charts and stocks in 2005, and I didn't get good at it until 2012.
Right.
In terms of being able to make a consistent return and understanding how the market works, basically,
Right.
And not always being afraid of it.
What's a consistent return?
So back in 2005 onwards, I might have done the Warren Buffett approach, where I'd pick a company, pick a sector, and you kind of fall in love with that sector and you hang on to it because you have a belief in it. It had nothing to do with the chart or anything like that.
Right.
So when you're doing that, I just find it so random and you have no control over it. And that's kind of what the average person's doing. So you shouldn't really expect to be overly successful by doing that, in my opinion. So I find that, some years I'd be up maybe 30, 40%. The next year I might be down 10 or 20%. There was no consistency to my returns.
Right.
And when 2008 came, my money went down in value because I was blindly holding. And so I kind of learned through that process that maybe I should try a different approach.
Right. And what was that approach?
Well, rather than just holding and being oblivious to the fact that a market crash can happen, and even beyond a market crash, yes, in 2008, general stocks crashed, but prior to 2008, there was individual sectors or companies that crashed. It doesn't always happen in 2008 or the year 2000 and all these famous dates where the general stock market crashed. You can have independent corrections and crashes in a certain stock or sector. So I started realizing that I shouldn't just be looking out for a global stock market crash. I should be looking not to be hanging around for any crash or large correction on any company or any chart at any time. That's more.
Sorry, finish your thought. Go ahead.
That's more what I began. I mean, in 2008 is when I began investigating that, and I started saying to myself, well, how could I have known, or how are these people on CNBC or BNN television in Canada, how are these experts who are much more experienced than me, how are some of them avoiding these crashes? You start to kind of try and follow people of a similar thinking as you and learn from them. In the same way that if you want to invest in student rentals, you talk to someone like Erwin or Mike or someone who maybe has dealt with 5 or 10 or 50 student rentals before for years. So I kind of did that with stocks, and I started to learn about market cycles and getting in and out of stocks as opposed to just holding them blindly.
Right. And so did you accurately predict the last correction?
Which one?
What, just a few months ago? You
Oh,
mentioned it, like the biggest one-day drop in how long?
the recent correction here,
Yeah.
yeah. It's funny. The way it works is oftentimes I end up being out of stocks when I see a reason to exit or weakness in a stock chart for my own reasonings, and it ends up leading to some major news and drama where things drop further. So I'm often on the sidelines when a drop is happening. Because
So you were completely out?
yeah, I didn't lose anything on this drop. I don't own any shares, so I mean, I was. Yeah, I'm not saying I never lose money. There's definitely times where I have to sell out of a position and I lose a little bit of money. But what I'm doing is I'm trying to get in. If there's a major correction in a certain company, even Warren Buffett bought Apple shares recently after they corrected quite a bit. If you get into an investment opportunistically and there's a chart signal that I like and it says investors are stepping in, I can get in when there's a big discount and try and catch a lift up. And I try to exit and take those profits rather than just letting them ride at that point. So because I'm doing that, I'm often out before a big downturn happens. I'm getting out when I see that direction change on a chart.
Right.
And it's not an exact science, but you don't have to hit 100% to make money. So I've got it down to a bit of a system where I can make small losses and have large returns, and have it average out to a good annual return.
Right. And then, okay, so what are you predicting for the rest of 2018? Any more major corrections, you think? Can you see that far in your crystal ball?
I mean, the one thing that even professionals in this in the stock market will say is that you can always predict direction, and when something's turning from bullish to bearish, you can determine direction, but you can't determine magnitude. So I would say we're still in a bull market. I can't predict how high the market will be at the end of the year because you can't predict exact numbers. But I would say basically that the current correction we're in is no different than any of the previous dips we had last year or the year before. It's always panic in the streets, and then they start talking positively when the market simply goes back up again.
Right.
So I would say if you're hoping on a market crash, I don't think it's going to happen this year. And there's a whole number of reasons why I could say that, but it's just the environment is not the environment where a crash should happen. And right now, I think the media is just hyping up a bunch of fear, basically, which what they always do. So.
Right. Can we go on a tangent and ask you if you think there'll be a crash in real estate?
Are you talking about Canadian real estate, I assume?
Yeah.
Okay. Well, I would say no for the short term anyways. I mean, you never know what's going to happen in 5 or 10 years. And
oh, yeah. You can't predict like 9/11 will happen.
You can't predict. You can't predict if lending practices will go crazy in the next 5 or 10 years, and we have a 2008 U.S. real estate correction. But
Right.
I was actually in Florida helping people buy property in 2009, 10, 11, and 12. So I was studying that, and if you watch the movie The Big Short or you study it a little bit, they were lending money to anybody. I mean, even if you didn't have verifiable income, you were getting multiple properties with no money down and 40-year amortizations. Any Canadian, even if you think you've gotten an easy mortgage, you didn't get easy mortgages like that. I mean, it's not commonplace.
Yeah.
So
They call them ninja loans.
Ninja loans, no income,
no job or assets.
Yeah.
Ninja.
And ninja loans, yeah.
If any of our listeners are getting ninja loans, please let me know. Because, like you and I work with a lot of investors. Everyone's getting scrutinized like crazy.
Exactly. And, I'm sure there's the odd lender that's putting numbers down on a piece of paper they shouldn't, but it's not commonplace the way it was in the U.S. You literally didn't even need a verifiable income, and they were giving you loans. Yeah. So I don't believe we're set. They
and they had a whole systemic issue, like the whole CDOs, like the whole the whole system was set up for that to happen. That doesn't appear to be true here. Like our Canadian banks hold their mortgages for the vast majority. So they can't just pass on the rest to someone else. They're like, oh, let's write garbage then, because they can't. They'll go bankrupt.
It was a really mixed up situation, and a lot of people just say, well, U.S. real estate, Canadian real estate, same thing, and they kind of make the assumption that the Canadian real estate market can crash. I really don't think that's the case. I mean, I'll do a little plug here. I've got a bunch of stuff on the side here. You know, Don Campbell, right? Don Campbell's book here. Secrets of the Canadian Real Estate Cycle. If you're someone who actually studies Canadian real estate and studies it more seriously, I don't think you're as fearful of a crash, a U.S. style crash. Can there come a time in the next 5 years or whenever where after moving up so much we dip a little bit? For sure, and it should happen at some given point. But we're not some crazy U.S. style bubble. If that's, I don't expect that.
Yeah, and if anything, like from what I'm seeing, we're already on the way back up. We had our OSFI rule changes. We had our interest rates have gone up already. And based on what we see in January, February, and March, because we're seeing multiple offers like everywhere in this March. Like we've had our correction from the peak and from the spring last year. Prices have come down in many segments of the market, except for condos in the GTA. But everything seems to be on the ticking back up. So that's what I mean, from my point of view, just in terms of the way things have gone, I mean, even back in 2009 and 10, I remember interest rates were 5% when the U.S. real estate market crashed. In Canada, our rates were approximately 5% on a mortgage, and we've been dropping our rates. I mean, nowadays we were able to get mortgages in the 2 to 3% lending rates not too long ago, and when you have interest rates drop like that, you expect the price to naturally go up. That's kind of just the yin and the yang of how the market works for that. So what happened more recently is we had the foreign buyer tax, which was put on in Ontario, and other regions all have their own separate rules for that. Right now, there's a provincial election coming up in Ford is going to get rid of it
in June, and Doug Ford, who's the brother of Rob Ford, the famous Toronto mayor. He's going to be running against Kathleen Wynne. And I mean, not to get too much into politics, but not many people like Kathleen Wynne right now. I mean, if you live in Ontario,
the least favorite premier in Canada right now.
Exactly. So, personal opinion aside, the media talks about it openly that she's not well liked in general. So you have Doug Ford coming in with almost an easy opportunity to win, and all the polls are showing a landslide win potentially for the Conservatives with Doug Ford. If that happens, he's promised to take away the foreign buyer tax, which is a 10 or 15% tax on money. Exactly. So, in Niagara, and I'm sure in the GTA in Hamilton, they were part of the people who were driving the market, people from China and other countries coming in here. So from last May when the foreign buyer tax came in until today, you don't see bidding wars that much anymore in Niagara due to the foreign buyer tax. Right. If in June Doug Ford wins, he's promised to take that away. That's going to be really bullish for Ontario real estate in general.
Right. Well, like you said, like he's leading the polls. So again, like politics aside, it looks like this will happen. So do what you think will help you in your future. But yeah, enough about stocks. Oh, actually, no. Actually, I wanted to bring it up while we were talking about PCs. Like he's talking about privatization of weed, and I know that you. I don't know what it is, but like on your Invest Like Mike, Invest Like Mike, right? That's what it's called, right?
Yeah, I have a free Facebook group where I talk about the stock market and analyze charts almost every day. It's called Invest Like Mike.
Yeah. So for those of you who are too busy to do what Mike does, you probably want to follow along on his Facebook group, Invest with Mike. Is that invite only?
It's called Invest Like Mike, and you can, if you just type in Invest Like Mike on Facebook, you'll find it, and you can request to join for free.
But it just seems to be a hot topic with your group is that you guys are always talking about weed stocks. What does PCs mean? If the PCs win and they scrap the government being the world's largest pot dealer, what does that mean for weed stocks?
Yeah, that's been a hot topic for people that are following that sector. I mean, some people might not follow stocks closely enough to really even studied the marijuana sector.
Anyone who's talking about anyone who invests in stocks, it seems to be weed is a hot area for discussion, and cryptos. But we'll get to cryptos later.
Right. I mean, the thing for anyone listening to this, I'm not sure who's been following this as closely as I have, but when Justin Trudeau won in 2015 as the Prime Minister of Canada,
enrolled in Doobie to celebrate.
He was very pro marijuana, and he was trying to gather the youth vote and the liberal vote. That was one of the ways he did it. So when he won, the marijuana sector went up in value quite a bit. On the day of his election onwards, they went up quite aggressively. And with each announcement from then onwards, each positive announcement caused them to go up a little more. There's a lot of money that's been made in that market. Right now it's March 27th of 2018. I started watching this in August of 2016. I actually sent you a message about it, Erwin. I remember messaging you saying, if you're considering it, you should probably buy these 2 or 3 companies.
Which companies were those?
The one I was telling you about, and it was the obvious. I call it the Home Depot of the marijuana industry, or the McDonald's of the marijuana industry, the top dog. It's called Canopy Growth Corporation. So CANOPY, Canopy Growth Corporation. They're by far the largest sized company and the most established company. And I remember in August of 2016, I bought them for $3.76, and they went as high as $44 not too long ago. So, I mean, that's like 1,000% return or more.
And you had it?
Well, I actually didn't hold it. I mean, I again, I go in and out, and I bought it at $3.76. They went to $18 2 or 3 months after I bought it. And then the same day it went to $18, it went to $9 in the same day. Okay, so
wild ride.
It's a wild ride. I mean, let's call it the student rentals of the stock market. I mean, there's a lot more variables at play. So you do have to be careful. And you tend to get a lot of people rushing in that drove it to $18 and thought it can only go up. And that's usually when a correction happens. So, yeah, no, I did not hold it blindly. And, in this specific scenario, if we're looking back, right now we already know it went to $44. So you could have just held and done nothing and made 1,000%. But when I bought it at $3.76, I did not make the assumption it was going to $40. So I couldn't have known that at the time, and I did not hold it blindly. But you know what? When I sold it at $14 or $13 when I bought it at under $4. So I made triple or quadruple my money with that initial investment, and I ended up seeing it drop all the way to $8, and I bought it back at $8.08. So that's kind of the perspective I have on why I'm not holding blindly, because I've figured out a way to sell when everyone think it can only go up and it can never come down. And even if it goes up, so when I sell, it peaked at 18. I didn't sell at 18. I only got $13 or $14 as my sale price. But it's impossible to always catch the top. I'm just happy that I made a substantial return on it and that I kept it.
Right. Any books you can suggest to listeners who want to trade the way that you do?
In terms of books for the stock market, I mean, there's so many. I can grab a couple behind me here. I just kicked the cord on the ground and now it works. I don't know. my high-tech equipment is pretty good.
I thought you disconnected something and you reconnected it.
No. So in terms of books, I mean, the first book everyone talks about is this one. This is the Warren Buffett Way, it's called.
Yeah.
And there's been many revisions to it. This is the first edition, I believe, and it gets updated and re-released as the years go by. This one, I mean, who's the most famous stock investor in the world? Warren Buffett, right? So that's why this is a bestseller and a known book.
We'll talk about him later when we talk about cryptos.
Oh, that's a whole other discussion. But, when I say buy low and buy after a correction happens, Warren Buffett is famous for saying, you buy when there's blood in the streets. When everyone else is fearful, you be greedy. And that's how Warren Buffett does it. If he buys into Apple when there's a big correction. He buys into Bank of America after a big correction.
Morgan Stanley after the financial crisis. Pref shares, mind you.
If you're someone who doesn't know anything, if you're someone that doesn't know much about stocks and you don't want to get as technical as looking at stock charts every day, this is a good way to value invest and look at it from a more generalized point of view. If you want to do passive investing and not getting in and out, then the Warren Buffett way is actually a good general view of how to invest. If you want to get more technical, then there's a million options out there. This is one that I'd recommend, and it's not a book that everyone knows about, but the Street Smart Guide for Timing the Stock Market. It's actually a pretty popular book. It's a bestseller. The Street Smart brand covers a number of different topics. And if you go into this book, it was written in 2006, so it won't talk about cryptocurrencies or anything that's happening in 2018. But if you want to know how to analyze a stock chart and look at market crashes and how to invest and how to get in and out, the things that are in this book are still valid today in terms of the examples used and the way in which they teach you to view a chart. I apply it to modern charts.
Right.
So that's a very well-reviewed and trustworthy book, in my opinion.
Street Smart Guide to Timing.
Street Smart Guide to timing the stock market. If you look on eBay or Amazon, you might be able to pick up a second-hand copy, or maybe you can get a new copy. It depends how available they are.
By Colin Alexander. And I wanted to bring up the point is, some people have approached me in the past saying, "Oh, you're anti-stock, you just do real estate." Like, I am a capitalist. I am pro everyone making more money so that they can do more good in the world. And however you do it, as long as you're not hurting anyone, that's I applaud you. So, in case anyone out there is like saying, "Oh, what are they talking about stocks on the podcast?" Like, you've legit consistently made money at this. So I think people need to learn about it.
Again, the thing is too, I will point out that I haven't really had a losing year since 2011. Once I figured out my consistent strategy, I've been making returns. It depends on the year, but you can make a 50 to 100% return without spending crazy amounts of time at your investments. Once you have it down to a science, you can make pretty healthy returns. Some people might say that sounds crazy, but it's really not crazy. You have certain companies that might have tripled or quadrupled in value in recent years. It's just what happens during a bull market like this. So some people might think you can only make 5 or 10%, and that's a good annual return, and stocks are random, and it's just, that's not the case in my opinion. And a mix of real estate and stocks, I think, is the best way to do it. If you don't perceive either one as being a big risk and you understand them, I think it's good to have a mix of both.
Right. Now let's move on to cryptocurrency. Are you able to use the same methods in your cryptocurrency investing?
Yes and no. So, cryptocurrencies, I'm sure everyone's heard of Bitcoin by now. Even if you don't know what it is, you've probably heard of it. 6 months ago or 12 months ago, a lot of people, you could have said, "Do you know what Bitcoin is?" If you went up into a public mall, let's say 12 months ago, and said, "Do you know what Bitcoin is? Do you know what Bitcoin is?" Most people really wouldn't know what it was. Even some people had heard of it. No one owned one. Now people have at least heard of it and know it's a digital currency at this point. I know people that bought Bitcoin in 2012 or 2011 when it was probably, I don't know, $20, and it went to almost $20,000. So, I've heard from people of all different perspectives, and I remember having a conversation with someone who said, they bought way back when, and it's gone to 20,000, and it's this amazing investment, and it really has been for them. But I try to explain to them nothing goes up forever. And, back in 2009, 10, 11, there was people investing in gold that thought it would go up forever. Recently, it's been Bitcoin. There's always something that people invest in, and they think it'll go up forever. So I've been through all that. I saw that gold didn't go up forever. I saw that stocks don't go up forever. So when Bitcoin came about, I started saying, congratulations for making these great returns, but just be mindful that if you hold blindly, at some point there's going to be a big dip. And people were kind of fighting me on it and saying, no, it'll go up forever. It's not like other investments. And that's when Bitcoin was, 15,000, then it went to 19,000. It went down to like $6,000, and I'm not one to say I told you so, but I told you so. I mean, it's kind of just the way it works. Nothing goes up forever. When you breathe in, you got to breathe out. It's just the way it works. So to answer your question, I do treat Bitcoin like a regular investment, but I think a lot of the hardcore investors of Bitcoin do not.
Right.
And they invest in it emotionally like it's going to go to $1 million per coin and never going to stop going up.
Right.
So I don't view it that way.
So let's discuss the because for especially listeners who aren't as familiar with cryptos, so like hardcore investors, they'll actually buy the currency. They'll actually exchange their dollars for currency. They'll sign up for their whatever, and they have their digital passwords and whatnot. You're not doing that. You're actually trading something else, are you not?
Well, okay, so there's been a little bit of an evolution as to how I've been doing my cryptocurrency trading, maybe since we last spoke about it. So let's go back to 2017, okay, summer of 2017. If you knew what Bitcoin was, you were in the minority of society at that point, okay? This was literally, less than 12 months ago.
It's been around how long? How long has Bitcoin been around?
I don't want to guess. I don't want to guess which year it began, but I think what happened was when the U.S. economy tanked and crashed in 2008, it came out of that crash. People saying, I don't want to rely on the U.S. economy and the U.S. dollar and the U.S. stock market and U.S. real estate market.
2009. It's a way to get January 2009.
It was a way to run away from the uncertainty of the U.S. economy for a subsect of society.
Yeah, gold does that too, but yeah, okay.
Yeah, exactly. So, with my way of investing, I'm a stock guy, and the way it works, what Erwin was referring to is if you want to buy stocks and you have a TD Waterhouse account, right? You can go to your bank, say, put $5,000 or however much money into my TD Waterhouse account, and that account allows you to buy stocks like Microsoft, okay? It's held in your TD Waterhouse account. TD is an established brand. You can log in and see it anytime you want.
Yeah.
If you wanted to buy actual Bitcoins, you could not buy it through your TD Waterhouse or TD Bank. You had to sign up for this weird website, and there's many of them. It'd be kind of like going to NFL.com or NHL.com or, imagine going to instead of NHL.com, going to JHL.com, and it's some hockey league you've never heard of. You wouldn't rely on the information that's on that site. You wouldn't even know what the JHL is. You only know what the NHL is. So if you're someone used to putting in thousands of dollars into a stock through your Toronto Dominion bank account, are you going to load your same $5,000 into this random website called Kraken or Coinbase and these new names that have no history behind them in the minds of most investors, right? I mean, who's going to put serious money and upload it to this website and put it in jeopardy? So I wasn't doing that. I didn't trust that. So what Erwin's referring to is last summer I began buying a stock or a trust that represented Bitcoin and you could purchase it in the regular stock market. So I was buying a Bitcoin trust.
What was it called?
It's the representative's ticker symbol is GBTC, and it's called the Bitcoin Investment Trust, GBTC.
And it's traded on what exchange?
Well, I use stockcharts.com to look up my stock charts, but there's Yahoo, there's Google Finance, there's many.
No. It's OTC markets. I am so rusty at this stuff. I don't even.
I'm sorry. Right. It's considered OTC, over the counter. It's considered a riskier sector of the stock market, essentially. And so you're not going to see Microsoft as an OTC. Microsoft will be listed in the regular Dow Jones or NASDAQ. This is still a U.S. listed entity, but it's an OTC stock, which is considered typically a more immature or a more risky and volatile area of the market.
Interesting.
Yeah. So a lot of people,
it follows the price movements of Bitcoin.
Exactly. So if you were to go to stockcharts.com and type in the ticker symbol GBTC, you'll be able to see a representative diagram of the price movement for any company. So last summer, I said to myself, well, I know how to read stock charts and I know how to buy stocks through Toronto Dominion or Royal Bank. So I said, why not try Bitcoin and apply what I know about stocks and stock charts to Bitcoin instead of just missing out on all of the action? I didn't want to trust one of these random third-party websites that I wasn't familiar with and buy actual Bitcoins. So last summer, I began using my chart analysis and ability to enter opportunistically and exit opportunistically. And I mean, the first time I bought it, I think I bought it at, I want to say $250 GBTC was worth. Mm-hmm. And it ended up going up to, I think, $450 within a week of me buying it. And so I doubled my money very, very quickly. Mm-hmm. I took my money, and it actually went to like $550. It went up higher than what I sold it at. Mm-hmm. But I didn't care. And I'll explain that. I mean, a lot of people, if they know that it went to $550, they want to know, Mike, what's the strategy for making sure I catch the entire $550? I want to sell it at, $5 or $550. It's tricky to want to do that. I think the more reasonable approach, in my opinion, is when can you enter so you catch most of that move? Mm-hmm. That's really what I'm doing. So, I got in at $250, I exited at $450. I almost doubled my money on it. Do I really care that I didn't make more money? I really don't. I mean, some people might not like hearing that, but it's impossible to repeatedly over and over pick the exact top and exit at the top for any stock. It's just, it's like Barry Bonds wanting to hit a home run in baseball every time. You just can't do that.
Yeah, you just take more steroids. No, I'm kidding.
Hey, you know what? If you have a lot of insider information, you could probably get everything right. But unless you know the CEOs of all these companies, you're probably not going to pick the exact top. Right, so, right. You know what? It becomes almost like letting go of that, having some humility and saying, I know I'm not going to be perfect, but how do I maximize my return for the year? Right, you know, you don't have to catch the entire move from, let's say, 400 to 700 on a stock. If you can even just catch part of that move and keep repeating that success, you're going to have a good return at the end of the year. That's more the approach I take at it. Right. And I applied that to Bitcoin through the regular stock market. I got in and out of GBTC 3 times successfully last year and probably made, 5 or 6 times my money that I was putting in. I made probably 5 or 6 times my money using the stock market to buy Bitcoin.
So you talk about this as well on Invest with Mike on Facebook?
Yeah, it's the Invest Like Mike group. I talk about cryptocurrencies. I've been talking about the marijuana sector since 2016, cryptocurrencies since last year. And I even get into a little bit of the Canadian economy and the U.S. economy and factors that directly affect the stock market.
Mm-hmm. Okay, cool. You okay for time?
Yeah, I'm okay.
All right.
Yeah,
maybe just 5-10 more minutes.
Yeah, you're good.
So I didn't prepare you for this question.
Uh-oh. Here we go.
So you almost died. And we don't have to talk about why or how or I think the more interesting thing is that, you beat it. And then how do you live your life after you've beaten it?
Yeah. So, I'm assuming you're referring to health challenges when I was a kid, basically.
Yeah.
7 years old, I ended up having cancer when I was a little kid. And it's probably something everyone knows someone in their friend or family network who's had it. And I had a family history of cancer. It's common in a lot of families nowadays. So it was probably a pretty scary moment for my family. I don't remember that much of it back then, but I was lucky enough to have successful treatment and recover from it fully. So I think going through any experience like that, I have some friends that have gone through it even later in life. And I think, me as a kid, I didn't really learn much from that experience as a kid because you're a kid, right? I mean, you're just playing video games. But as I became more of adult age, I kind of learned from the past experiences I've had. And someone who gets cancer as an adult probably starts to realize those things right from the beginning because they're of an adult mindset. So I almost appreciate what I've been through more now as an adult than I did when I was a kid. And because I have realized that as an adult, I kind of I don't really sweat the small stuff. A lot of people that know me, they don't know me as someone who gets angry. And even being a landlord, I mean, I have a long fuse and a lot of tolerance for things because no matter what's going on at a rental property, there's worse things going on in life. So it kind of gives me an outlook, and something pretty bad's got to happen to me in my life for me to be down on my life at this point, because I'm just kind of grateful to be alive and healthy. And, you know, so if you've ever been through this type of a scenario, I mean, you're a little kid in the hospital room. Some of the kids in my own hospital room aren't alive today. So it gives you kind of a perspective that I was one of the lucky ones.
Yeah. It's very real. Like, you may not survive.
Exactly. And I mean, I have relatives that have died of cancer. I mean, I'm one of the lucky ones that have survived it. And I'm sure there's a lot of people that have been through that type of a scenario. So, I mean, I have a good friend of mine from high school that beat cancer a few years ago, and it's almost like we have a connection now. You know, we're cancer brothers and survivors, and even Brett Wilson from Dragon's Den, you know, he publicly talks about being a cancer survivor, and I remember meeting him in person, and there was that little connection we had together, and we talked about that. And I think it's easier to appreciate life and have a more open mindset to anything you're doing if you have that type of an experience. You know, like if you've had no financial struggle, no health struggle, no family struggle, you might be going through things thinking everything's always positive. But if you've been through some rough patches, whether it's for health or personal or business or education, it helps you maybe view future events in your life differently, you know? So most of the times when I encounter something, I subconsciously I've been through worse. So I'm able to stay calm-headed and kind of enjoy my day-to-day life, I think, and appreciate things a lot more.
Right. And you studied health science. Was it kinesiology specifically in school?
It was general health sciences, okay. And then when you're done that degree, you can then do anything health-related from there, basically. Right. Yeah.
And I specifically wanted to ask, like you're pretty picky eater. Not a picky eater. That's not this word. I think you tend to try to make healthy choices. So could you like elaborate on that?
Yeah. So I mean, I having come through the health sciences program, I did a lot of research, and I mean, I took the statistics course by choice to the fourth year because I enjoyed stats and research quite a bit, actually. So even just in my personal life, I graduated in 2005. And now it's many years later, I've continued, you know, looking up peer-reviewed journal articles, studying diabetes and cancer and all those things. So, you know, I remember when juicing wasn't popular, I was kind of trying out juicing and kale and all that stuff back in 2010 and 11. So I've tried to kind of stay on top of that type of stuff. I mean, I'm not going to pretend I'm a health nut. You're the health nut compared to me.
Nah.
And I've gained a few pounds, but... but I know what you're saying. I mean, I do grow my own vegetable garden, and I'm very aware of how important it is to try and eat good quality food and to eat more vegetables than you are, you know, carbs and protein. You really, a lot of people don't eat that much in terms of vegetables because they're not as enjoyable as a steak or a bacon or a hamburger would be. But I grew up with Italian immigrants and farmers who, I was surrounded by homegrown vegetables my whole life. So I do incorporate that into my life, and that's part of why I try to grow my own vegetables and get some exercise in that I enjoy and is relaxing to me. And I try my best. I'm not perfect, but I'm definitely aware of trying to keep that balance and keep myself as healthy as I can.
All right. Can you name some of those pasta brands that you recommend? Because you remember we've had this discussion. You were telling me how celiac, I mean not celiacs, but people with gluten allergies, if they have pasta that's imported from Italy, they don't seem to have the same problems.
Yeah, it's funny. I mean, I'm not going to speak. I'm not a doctor, obviously. So anyone listening to this, go ask your doctor or your nutritionist or whomever if it's recommended. But my mother's diabetic, and again, just through having been through the health sciences degree, I've been studying diabetes a lot because I have people in my family with diabetes. So, food has a big impact on our life. And I remember saying to myself, why do my relatives in Italy not really have diabetes, but the ones that moved here do? And the only difference is really, they're just eating Canadian food versus Italian food. We're still eating pasta and sausages and bread and all of the same types of food.
So the source is different. Yeah. Same food, the source is different.
Why was my mom allergic to our gluten? And when she went to Italy, because my parents visit and we have a lot of family there, she went there the first time when she was knowingly allergic to gluten, saying, I'm going to pay for it, but I got to eat what they serve me. And it's going to be bread and pasta. I mean, no Italian chooses to be gluten-free in Italy, right? It's just, it's not the way it works. So she ate the pasta and the bread there and nothing happened. The same pasta and bread in Canada would give you a bloating, uncomfortable feeling, and it's different. So when she came back to Canada and told her doctor, the doctor said, yeah, there's a lot of Europeans here who have told me that experience, and the European grown wheat is of a different strain and variety, and it doesn't seem to bother you. So in Canada, if you look for European produced pasta, there's several different brands. My mom discovered that the No Name brand pasta is produced in Turkey, doesn't bother her stomach, and there's several Italian brands like Molisana, Molisana. That's even at Food Basics and regular grocery stores. There's certain ones produced in Italy. It'll say product of Italy using Italian wheat or, again, Turkish wheat or anything in Europe. And my mom does not have her typical allergic gluten bloated reaction anymore if she eats that.
Do you guys buy flour as well? Like if she wants to make like pizza crust, for example.
She doesn't, and part of it is you have to pay more for that Italian wheat to buy it and use it over here. And so no, I'm sure if you really tried hard, you could probably find a farm where maybe there's people, maybe even an Amish farm where they're growing old school wheat, and you could probably try and source it out. But it's not that cheap. If it's readily available at a store, you're going to pay for it. So she uses some rice products and other products, but no true Italian wants to eat rice pasta. I'm sorry if that offends anyone, but my dad and my older relatives who are from Italy, they want their wheat pasta, and if they happen to be allergic to gluten, you can kind of eat the European wheat, and it doesn't make you have that bloated feeling. From what I've heard, anyways, I haven't talked to everyone, but it seems to be a very common experience.
Right.
Yeah,
Mike.
So
it's been a fascinating conversation as always. Dropping gold. For real estate stuff, how can people reach out to you? Because I know you're looking to acquire more apartment buildings, and so for anyone interested in partnering up, how can they reach you?
Yeah, I mean, if someone's looking to invest in Niagara and you're kind of either far away or don't have the time and experience to deal with it, I mean, I am looking to try and work with people that want to work strategically together, and I can help find good deals and good locations and implement a good strategy. I have a website.
And the ongoing management.
And the ongoing management. I mean, if I have a vested interest in the property that I have ownership stake in, I'm going to really watch over it carefully, and I want to try and set up long-term investments, as do you, and as do most diligent investors. So if someone wants to get in touch with me, I mean, you can go to my website, ppmniagara.com. So that's Premier Property Management Niagara, ppmniagara.com. And you can see some general descriptions of what I do there, and it'll allow you to get in touch with me if you did want to discuss anything as well. But I'm definitely looking to, like I said before, get into some investments strategically that should gain a lot of equity when the GO train arrives. That's the general theory. When you have something new coming to your area, whether it's education or roadway expansions or access to a subway or a GO train. And I think there's a lot of exciting stuff ahead for Niagara.
Mm-hmm. And then for the stock stuff, how can people follow you, get in touch with you?
If you want to follow all of my charts and the main conversation with what I do in stocks, go on Facebook and type in Invest Like Mike, and you will see my Facebook group pop up called Invest Like Mike. You can join for free, and I'm on Twitter, and it's at Invest Like Mike is my Twitter handle. So you can follow either one of those if you'd like. And obviously, if you do that, do all your own research and don't invest on what I say, but I just show what I'm thinking and what I do with my money.
Very cool. Very cool. Thanks again, Mike, for doing this. It's taken forever for us to get together on doing this.
Yeah, we're busy guys, and hopefully with the spring coming, maybe we'll even see you in person in Niagara trying to buy more properties here more often.
Yeah, and I'll buy you lunch. And again, everyone buy Mike lunch.
How am I gonna stay healthy if you keep having people buy me lunch?
Just go eat nice healthy places. We always go to nice places.
Yeah, we try to actually eat some good food when we get together for sure.
Yeah, that's another benefit of being your friend is where the good hot spots are. You're guaranteed a good meal.
You're not going to lose weight if you hang around me, that's for sure.
Yeah, because you're just going to eat more of whatever it is. It's not that it's necessarily bad for you.
Yeah, for sure.
All right, thanks again, Mike, for doing this.
Thanks for having me.
All right, I'll talk to you soon.
Okay, take care.
Do you want to be a real estate investor and don't know where to start? Then I recommend you attend our Halton Real Estate Investor Group meetings, where you'll meet and learn the secrets of many of the guests of this show who have earned 7 figures or more from their real estate investments. Almost none of them did so without having to manage their tenants or unplug toilets. We have the best property managers and plumbers we can refer to our clients. I can't promise you results, but you've heard from every client of mine who's been on this podcast, and you may have noticed they're quite successful and on their way to financial freedom. Plus, I'm a big believer that knowledge is power. To register, go to www.truthaboutrealestateinvesting.ca/meeting. Again, that's www.truthaboutrealestateinvesting.ca/meeting. And this could be your launchpad to financial freedom. Do register as soon as you can. We had to start a wait list for the last meeting as seats are always limited. I hope to see you at the next meeting.